Hello, it's Wednesday, it's Face Off Day. Thank you all for coming. I always, sometimes, the videos get more and more important, but this one is probably one of the most important videos you'll ever watch over the next 10 years. And let me explain why. It is a very aggressive face-off, touching on two of the most important transformative companies, I believe, in this era of AI and AGI, etc. This will determine our next decade, and these are the two leaders as far as I'm concerned. So you are about to embark on a journey through the most in-depth financial analysis, as well as price projections, multiple different ways, hundreds of ratios, and a lot more. And you will not find anything like this anywhere else on the interwebs, or even anywhere else at all, even not the interwebs. And of course, this is not financial advice, just edutainment. So first of all, Patreon voted for this overwhelmingly. It wasn't crypto. It was Tesla versus Nvidia. And much of this is probably fueled by the fact that everybody now knows the biggest driver of the S&P 500 year to date has been Nvidia. It's been huge. Second of all, it's the kind of linchpin behind AI. And third, if they miss earnings after the close today, the market could get torched. If they beat, the market could ignite. And then we have, of course, Jackson Hole on Friday from Palo. So it's a crazy week, and there is a playlist. I have a playlist for everything. If you're only interested in certain categories of content, go check out my playlist, subscribe to them, or I don't even know how playlists work, actually. But anyway, this is the 10th or 11th in the series of face-offs. It's our second equity one, and it'll be big. And yes, this is an AI story. AI, I've been banging the table on this since last year. It is very, very important. Let me explain why it's very important, and you need it in your bag. So just 7 companies make up over 50% of the NASDAQ 100, okay? And what's interesting about these 7 companies, they are all AI companies. By the way, I do own, in full disclosure, Tesla, Meta, Nvidia, and Google. But the other ones, Microsoft, Apple, Google, Amazon, Nvidia, Meta, Tesla, they are all AI companies. They are all positioning themselves for this revolution, and they are all garnering the most capital. So that's just why it's important. And by the way, speaking of AI, if you want to amplify your intelligence, subscribe to this channel. You will be smarter. I promise you that. In every video, you will learn a ton. So let's talk about AI spend. First of all, this is from the Financial Times this morning. This was interesting because people think, oh, maybe, I think it was Gartner that came out and they said, oh, AI has already peaked, yada, yada. Well, no, it hasn't. So this is global cloud service providers' AI spending as a percentage of total CapEx in 2023. Microsoft spending 14% of their total CapEx on AI, which means servers and infrastructure. Number 2, surprise to me, is Baidu. Baidu is bigger than Google. I used to always call Baidu the Google of China, but they're spending more of their CapEx than Google are. Then Tencent, number 4, Meta, number 5, Oracle 6, Alibaba 7, IBM 8, and Amazon Web Services, number 9. Amazon need to get their butt in gear, but they've been spending too much on warehouses, so maybe they need to save a little bit of money. But the other interesting thing is, look at the Chinese names here. Baidu, Tencent, Alibaba. 3 of them are big Chinese companies. And a lot of people say, well, Chinese companies can't buy AI chips. They find a way. Trust me. Anyway, a quick high-level comparison of the two companies. You guys know them all. Who was listening to CNBS briefly today, they called Tesla a car company. Hilarious. I'll prove to you it's not in very short order. And of course, Nvidia is a semiconductor company. I'll also prove to you that these two companies are colliding together. You can see the market cap, about 730 billion for Tesla and about 1.127 trillion for Nvidia. In fact, Nvidia has just broke $470 right now as we speak. Tesla's $238. Nvidia's up 3%, $14, and Tesla's up $5. So you can see that the market cap is far bigger. And products, electric vehicles, solar panels, energy storage systems, AI. Tesla is making a huge play for AI. FSD is AI, bots are AI, etc. And a whole bunch more. And you can see that products from Nvidia are graphic processing units, AI chips, self-driving car technology, etc. You see, these two are colliding. That's why they're so fascinating. And obviously, Why would they have roadmaps towards the same things if they're not important? That's what you need to look for. You play where the puck is going to be, as Wayne Gretzky always says. Now, let's look at after earnings, after the close. The reason I'm doing this early, because I'll be looking at the earnings. They're going to be so critical. I'll have my seatbelt on in my chair. But here, analyst polls, polled by FactSet, believe Nvidia will earn $2.08 a share and sales of about $11.19 billion in the quarter. Now, if they miss that, as I mentioned, it could torch the markets. But this would translate to year-over-year growth of 308% in earnings and 67% in sales. Again, all based on red hot demand for their chips. So watch this space very carefully. Again, if they don't beat, we always keep cash on hand for the opportunities, but it is a very volatile stock. Either way, it's going to shoot up or down. That is a guarantee. Now, speaking of shooting up or down, options traders like myself are playing this as well. The options action has moved from Nvidia to Nvidia from Tesla, and people are doing a whole bunch of YOLO trades right now, buying strikes like short term, way out of the money, $600, $700. So it's kind of, I'm frightened looking at some of the options action out there right now as well. A lot of people are placing put bets as well. So watch this space carefully. Now, there are a couple of interesting things regarding Nvidia. Before you jump into the comparisons, I want to lay the ground for AI and why it's so important. And this is a key part of the story. You can see here that the Nvidia, I highlighted a little red box at the bottom. You can see that their gaming is shrinking, professional visualization shrinking, but their data center is growing, and their auto business is expected to grow a lot. But it's very easy to grow a lot from a small base. But that's going to be very, very important to watch for the future, especially as their auto business explodes in 2024. Auto business, I hear you say, I thought they were a chip company. Well, they are building FSD capabilities, and they have customers like Mercedes-Benz that are going to start deploying their technology in 2024, and then Jaguar and Land Rover, I think, in 2025. But they're kind of pursuing Musk's self-driving car theme. And the interesting thing about this is they have a platform called Hyperion 8, and it promises full autonomy via an array of sensors. We're talking cameras, we're talking radar, we're talking LiDAR, we're talking ultrasonic sensors, etc., etc. This stuff will not be cheap, and it'll look ugly as hell. But it's interesting to watch. Who knows? This solution, though, I believe, is not made for scale. It might be made for super rich people that want to drive themselves, because the cost of all of these sensors, etc., can be $60,000 to $80,000 a year. On top of the vehicle, like a Mercedes, which is 140 plus. So you're talking $250,000 easy for these vehicles. But we'll see where it goes. But it looks like they're targeting the luxury car market for this. And again, excuse the pun, but a collision course between Nvidia and Tesla, because this is a huge application for AGI. Now, let's talk about compute. This is very important too. So not only a collision course, but look what Tesla has planned. And I've covered this before, but just as a reminder in case anybody missed it, Tesla soon will have the 5th largest supercomputer on Earth. Okay, that is sometime by January 2024. And by October 2024, they'll have 100 exaflops of compute. And it gets confusing when you think about exaflops, but these are floating operations per second. And one exaflop is 1 quintillion, which is 10 to the power of 18 floating operations per second, which is massive power. And for those of you who remember the Cray XMP back in the day, I remember the first ever big, real supercomputer. Well, look how many exaflops these guys have. 1.194 exaflops from the Hewlett-Packard Cray machine. And that was, up until recently, the top supercomputer on the planet. It's just about to be completely obliterated by this. Now, there's a reason to me talking a lot about compute and AI, because this is an AI story. It's not a car story. It's not a chip story. It's a data crunching, data processing story, and how machines can be taught to learn from themselves. And that's key. Now, there is a thing called Dojo as well from Tesla. And there is a thing called an A100 from Nvidia. And the Tesla Dojo already outperforms the Nvidia A100 chip by, depending if it's an auto labeling, it can be 1.3 to 2x to 3.2x performance. Occupancy, also very different. We're not going to go into detail on this stuff right now. It's beyond the breadth of this, but I just want to stress for a second what Tesla are doing. And there's a lot of confusion around what Dojo is. So Dojo is their own chip they've based. It's a 7 nanometer process, 53,000 cores. It can perform 1 exaflop of compute at different formats. Now I'm getting out of my depth here. I'm not a chip engineer, but it also has 1.3 terabytes of on-tile SRAM memory and 13 terabytes of dual inline high bandwidth memory. The point is, it's really small. It's a sixth of the cost of all of these GPU boxes, and it is 6 times faster. So this is a game changer. So not only do Nvidia make the best AI chips, but now Tesla make better, faster, cheaper AI chips than Nvidia. But didn't Elon Musk say to the CEO of Nvidia, I'll take as many as you can get? Because it's about how much processing power you can have, how much compute you can have as quickly as possible. That is this arms race that we're in right now. In addition, it's all about training, as I mentioned. Dojo trains 4x faster than a GPU, which is huge. So what would normally take a month can now only take a week, which is very important for things like FSD and Optimus bots and stuff. Also, Tesla, as of Q1 2023, already had 7 Exapods in Palo Alto, California. Remember that Cray XMP supercomputer? Well, they already have 7 of them sitting in one office in Palo Alto, California. Anyway, the other thing that they're doing that came out last week is Tesla are building data centers. And again, we spent a lot of time talking about AI and compute, but they are building data centers to help not only train their bots and FSD in local countries, but when they have excess compute after that, they'll probably license it out like AWS does. And AWS, per my valuation, is probably $1 trillion business. If they spun it off, they'd probably have a market cap of $1 trillion. These guys are about to build more data centers that operate better, cheaper, faster than what already exists out there. So again, it's not even included in any Tesla analyst valuation model. And that's nuts, but we're going to get to some valuation models in a second too. And here we go. So this is what we call math engine time. Ton of ratios. If you don't like numbers and stuff, fast forward to the end, but you will. This is important. So Nvidia Growth, I break everything out to growth, earnings, debt, cash, stock-based compensations, etc., etc. And I'll go real fast. But here, the 2026 targets for revenue for Nvidia will be $73 billion in revenue. Earnings, $30 billion. That's kind of crazy to think that nearly half of their revenue will be earnings, but it's a very profitable business. They actually sell chips at a 70% margin right now today. So something that costs them, say, 100 grand, or say they sell it for 100,000, only costs them 30,000 to make, which is nuts because the demand is there. Tesla, on the other hand, you can see here their 2026 targets for revenue, based on analysts, by the way, is 161 billion and earnings of 22 billion. But remember, most of these forecasts do not include FSD, Robotaxi, Optimus bot. Some don't even have energy storage in there. So it's going to be a lot higher than this. So take this with a big grain of salt and add more numbers. In addition, let's look at earnings per share. Again, what I did here was I took the top range. This is from Simply Wall Street. And took the Analyst EPS range. And it goes up to $23.18 billion. So divide that by the market cap by that, and you get a top range of the PE of 20. So the point is of this, just to make sure you can wrap your heads around it, if you assume Nvidia will make that much profit, 23 billion in 2026, based on the current market cap today and the number of shares outstanding, it's trading at a PE of 20, which is cheap. And that's why I always say, oh, Tesla looks so expensive. Yes, on today's earnings, but if they nail this, it's actually trading very cheap. You play where the buck is going to be. So PE of 20 is cheap. Now, Tesla, on the other hand, you can see it's a little bit more expensive. Again, the top of the range there is $10. Take the stock price today, which is exactly 235, 238. Divided by that, you get a PE of about 23. So from this perspective, you could argue by 2026, Nvidia is cheaper. But I would also argue these analysts don't take into account all of the profit attribution that's going to come from lines of business that people aren't even aware of that Tesla have today. Now, we're going to switch gears. We're going to go to the TAM model. This is total addressable market. So I call this TAM time. And here on the left, you see the Nvidia total addressable market is estimated to be $600 billion by 2027. That's how much they can kind of sell into. This is the market for AI, hardware, software, and services. Remember, Nvidia is the leading provider of AI hardware. Their GPUs, their DGX systems. It's also a huge player in the AI software market. Remember, it's not just hardware. They got CUDA, TensorRT platforms, etc., and a variety of AI services, and they're building those, and they're funding a whole bunch of startups as well that they'll probably spin into Nvidia down the line. Tesla, their TAM is estimated to be 2.2 trillion. So that's more than, we call it nearly 4x what Nvidia has, and that's important. But that includes a couple of things like, based on the assumption that they capture 20% of the global EV market by 2027. We know EVs are beyond the tipping point right now, so they're just going to increase to probably 65% penetration in 2027. Also, energy storage business will generate 100 billion in revenue. And this does not include bots, robotaxis, FSD, licensing revenue, etc. Just the beginning. So from this perspective, Tesla has a far bigger TAM. Not that $600 billion is to be sniffed at all. Now let's look at, I did another thing. I created a TAM kind of reverse engineer model to come up with some pricing targets as well. I thought it'd be fun. So I took the typical price to sales ratio today for Nvidia is 47 and Tesla is 7. So from that perspective, you can see Tesla's a lot cheaper. Now the TAM, 600 billion versus 2.2 trillion out there as well. And then I put in an expected price to sales ratio that's more normal of 10. So Tesla will go from 7 to 10 and Nvidia will go from 47 down to 10. And that it gives us a realistic market cap in billions of 6,000 billion, which is 6 trillion for Nvidia, and 22 trillion for Tesla, which sounds nuts. Believe me, this is going out to 2032 though. I assume the actual TAM isn't as big as it's going to be in 2032. I'm using the 2027 TAM. So that will bring us to what I call a TAM share price for Nvidia, about $2,429. And for Tesla, $8,906. And the ROI from today is 416% from Nvidia and 3,690% for Tesla, which is nuts, absolutely nuts. But remember as well, the value of a dollar in the future will be less and less. So we won't talk about the half-life of the dollar. But coincidentally, I did this TAM model, and then I was like, wow, $8,900. I did a video earlier this year, talking about the 8 ways that Tesla gets to $8,000 by 2032. Of course, it has a lot of execution assumptions like bots and robotaxis and stuff like that. If they don't pull that off, that's off the table. But it was interesting to look at the TAM model too. And that TAM model is based on data that doesn't include all the revenue lines as well that I'm even talking about. So anyway, interesting times. Oh, I'll add a link to the video later. So let's talk about Tesla, another view of how the world is going to shake out. This is from Tesla Talk. It's their quarterly operating income by each general business line out to 2030. And many Wall Street analysts only just look at EV sales. But this one is a nice one that looks at the potential for EV sales, battery storage, robotaxi, and Optimus. And remember, it'll be extraordinary in terms of margin and profit attribution if they pull that off. And I created a reverse pricing model for this too, based on these numbers from Tesla Talk. And this is the operating income by line of business, total, and multiplied by a PE of 40. And that gives us a 2030 share price of $4,298. It all sounds completely insane when you can buy this thing for $215, $213 the other day. Anyway, that's just the nature of disruption. It is insane, but you got to wrap your head around it. So let's look at some valuation charts. Sorry, there's like 55 nuggets to get through here, but I'll go fast. This is the valuation, profit, and value and momentum, financial strength and growth from Guru Focus. And you can see here, the Guru Focus score is 83 out of 100 for Nvidia. And the Guru Focus score is 82 out of 100 for Tesla. You can see Tesla has better financial strength, better momentum, but Nvidia has better growth and better profitability. Therefore, Nvidia wins, but just by a hair, just by a point. But I thought it's an interesting point of view. And again, we score all of this at the very end. Let's look at some financials here as well, real quick, high-level financials. And yellow is operating cash flow, green is net income, Blue is free cash flow. These are all important. But look at this little red little pillar here that's growing really fast like a sunflower. It is stock-based compensation, and I do not like that. That is really high. In fact, the stock-based compensation is almost the same size as the free cash flow, which is scary. And as usual, I call this pocket lining heavy Nvidia stock-based compensation. Very akin to another company we saw last time I did this called the Block Square. Now let's look at how Tesla compares as well. You can see operational cash flow and net income at 15 and 12 billion respectively is awesome. And their stock-based compensation is going down, and it's very reasonable compared to other similar companies. So Tesla wins that one. Also, let's look at cash and debt. Double win for Tesla. They have a lot more cash than Nvidia and a lot less debt as a percentage of market cap. So very important here as well as we go forward. Let's look at dilution. We always have to keep an eye on stock dilution, especially if you're looking at Bitcoin miners and stuff like that, and many other stocks too. MicroStrategy as well. They're selling stocks to buy Bitcoin. But you can see here a couple of things. One is the stock dilution. Shares outstanding in 2023 were about 2.507. So it's actually fallen 1.1% since 2022. 2022, it had a 1% increase, so they're kind of like buying that back. And in 2021, about a 1.54% increase from 2021. You can see red is when they're buying back and green is when they're issuing more. So overall, it's up and to the right, but not too bad compared to other companies. Now, Tesla, on the other hand, you can see here, they have much higher dilution. Well, not much higher, but you can see here, there was a 0.4% increase year over year compared to last year. A 2.6% increase between 2021 and between 2022 and 2021, and then about a 4% increase from 2020 to 2021. So you can see it's kind of up and to the right, but that's actually slowed off as well. And a lot of it is to pay and attract the top talent on Earth. Whether it's SpaceX or Tesla, they use this to actually compensate employees and bring in the best minds in the planet. So, by the way, this is a huge one. Like, they're all huge, but if you want a recap for everything, subscribe to Substack. The best $40 you'll ever spend in a year, guaranteed. So let's get to the conclusion and wrap up some of the ratios. What I've done is put together big bags of ratios together so we don't waste too much time. So first of all, market info. I have a ratio called revenue over market cap. You can see it's 2.24% for Nvidia, which means it's an extremely high valuation. And Tesla's 12.68%. And the PE ratio for Nvidia is 243.71, and the PE ratio for Tesla is 67. Both are very high, but Nvidia is extraordinarily high. So Tesla wins both those ratios. Let's look at what I call the 30,000 foot ratios. These are things that look at liquidity and solvency and growth. You can see here, I have all the ratios plugged in, and automatically the system tells me who the winner is from data feeds. So from these, you can see here, operating margin and net profit margin, Nvidia wins because it's got a very high margin product. But return on equity, Tesla wins 28% versus 20%. Quick ratio, obviously debt is much lower for Tesla, so they win that. Solvency as well, they win that across the board. And growth over the last 3 years, Tesla's up 80% versus Nvidia 21%. So from these metrics here, you can see that Tesla wins 71% of them, 5-2 score. Let's look at Analyst upside. Now, this also has been skewed heavily because analysts have been going nuts. Let me zoom out for this for a second. We have some analysts, jacking the price targets of Nvidia up to $1,000, $700, $800, all across the board just over the last week or so. And that's bullish for the stock, but also very inflated target. So the average target for Nvidia now is $480. That means a 2.47% upside from the price right now. Tesla analysts, because they don't know how to tie their shoelaces, they have Tesla price at $225, which is a 5% downside from where we are. Tesla is currently trading over analyst expectations. And just so you know how it works with analysts and Tesla, they think it's a car company, so they don't understand how to value it. You get more information here than all of the other Wall Street analysts combined. Anyhow, enough of that. IA targets. These are my price targets, conservative sandbag price targets for 2025 for Tesla. You can see here, I do believe Nvidia could hit $700 in 2025. In fact, it could hit it tonight if earnings are blowout. Then again, it could fall to $350. That is the nature of this beast. Tesla, on the other hand, conservatively, I expected to hit $450 in 2025. That is a 89.6% upside versus a 49% upside for Nvidia. Again, Tesla wins price targets based on my analysis. Now, this is detailed ratios. This is pretty much every key financial ratio you ever need to look at. And I look at them all, crunch all the numbers, and here you go. I won't bore you to death, but for the people who are interested in all these ratios and want to zoom in, and I'll share this on Patreon later as well so they can have the definitions and everything else, you can see here that Nvidia, on these detailed financial ratios, only wins 3. And Tesla wins the rest. So this is a slam dunk. 86% of these financial ratios win box Tesla. Now let's look at historic performance. What have these two things done since inception? So if you go back in time, as of now, you can see that Tesla is up 19,243% since inception, and Nvidia is up 15,763%. You are looking, ladies and gentlemen, 2 of the best stocks in the history of the world. So I'm glad you're here. Everybody needs to at least have some exposure to these things going forward. Will history repeat? No, but after this analysis, probably yes. Maybe not as much. You're not going to make 20,000%, but you will make 1,000% or more. Now, let's look at some TA charts. This is 5-year chart for Nvidia. And you can see here the trend is very up and to the right. After that beautiful dip, I was just in bed thinking last night, I was like, can we have October 2022 back again, please? It was such a glorious time. While people are freaking out, you got other people licking their lips. Anyway, Nvidia is up 585% over the last 5 years. How does Tesla compare? Tesla's a bit more of a rocky road, even more volatile than Nvidia, but it is up 1,000% exactly. It's 998%. In fact, it's up over 1,000% now because it's just gone up a little bit in the market as we speak. But you can see here, it is a very volatile beast as we go forward. So I always say, wear your seatbelt. Let's look at now. We're ready for the conclusion of all of this data. I didn't weight them. If I did, it would have been more in the side of the red, let's call it. But here, in summary, you can see Nvidia wins on profitability. It wins on having less stock dilution. It wins on the PE ratio by 2026, only slightly. And it wins on Wall Street analyst targets. But everything else, Tesla wins. Historic performance, growth, financial strength, cash, debt, total addressable market, stock-based compensation, total addressable market price targets, revenue over market cap, guru focus valuation, 30,000 foot ratios, IA targets, detailed ratios, IATA, and most importantly, my 2032 target. Critical to watch. So the winner is Tesla, and it is pretty much a hands down winner. Tesla dominates. And for this analysis I just walked you through, the most important thing today is the ROI from today based on price targets that are conservative. Nvidia could get you 416% over the next 6, 7, 8 years, whereas Tesla has the potential to get you 3,700%. That is big. ROI, that's a 38x from here, if they nail things. These companies are converging. They're going to butt heads real soon. And the question is, who is the winner? For example, Nvidia getting into FSD. I do believe, hands down, Tesla will win. Nvidia might get a piece of the market for the luxury cars that cost $250,000 plus, but other than that, no. So everybody, smash the like. A lot of work goes into this video. We're talking days, not hours, but days and days and days of work. So big thank you to the team as well behind the scenes that make all of this possible. And come and join Patreon for the most alpha on the planet. We still have a few spots left. And thank you everybody for being here. Thank you, Beardy. Thank you, Revy. Thank you, Des, Mad Cow, all of our friends, and Mr. Hammer, and the mods in the chat as well. Have a good night, everybody. See you all tomorrow. Bye. Oh, don't forget, Nvidia earnings in 19 minutes. I'll be there.